Welcome everybody to Tesla Fix. Today we have a more casual episode, and on this episode we might talk about more the recent stuff surrounding Tesla again, because the FUD still continues. It's so laughable. So I've invited Farzad Mesbahi again on this channel to discuss all the things Tesla going on right now, the big news, the stuff happening right now, because it seems like everybody's still missing what was happening and the stock price didn't react at all, which is a good thing for many new term or new investors over there. So Farzad, how about you take the mic and we start this episode.
Welcome to Tesla Fix.
Sure. Thank you very much, Sean. Always a pleasure to come back. I'm a big fan of your show, and every time we get together, we were just saying before we went live, we're like, we can fill up 10 hours if we really wanted to.
We really could.
Unfortunately, we can't go 10 hours today, but we can definitely do so. But yeah, I'm very excited to get together. Yeah, a lot of stuff has happened here in the last couple of weeks about on Tesla and the broader sort of auto market and all that stuff, like really big stuff. And I think the implications are going to be quite dramatic. And I think it's going to take time for people to really digest what has just happened and transpired. It's going to take a few months, perhaps even years, for it to really play out. But it's just, it feels like we're about to go over some sort of hump.
Yeah,
I don't know if we're going down into a cliff or we're going up to the moon. I have no idea, but something's happening.
Yeah, maybe we start with the elephant in the room, which is the price cuts Tesla did. And there was a tweet from Elon Musk like a few months ago, 6 months or something, where he said, like, if inflation is bumped over, like he saw some signs that the inflation might be reduced at some point. Yeah. And then he said that they will reduce prices then, and now they did reduce prices. Do you think it's due to the demand problem, because Tesla has no demand actually, like many people say? But what do you think? What happened? Because I've seen an interesting statistic. You also talked about that it's cut in half now. So it's very fast. The inventory went down. It was like it's sold like hotcakes, but maybe you can elaborate on that one.
There's multiple things at play, and people that are on the bear side or on the side of, hey, they don't want to, for some reason they don't want to see Tesla do extremely well, or they think, Tesla is a fraud or Elon's a liar, or they just don't like it, whatever it may be. I think, or they're just legitimately concerned about the Tesla story as an investment. I think they'll see the price cuts as it's purely a demand problem, right? It's just demand. They don't have enough buyers at those price levels, and thus they have to lower the price, because that means they're not going to be able to grow unless they lower the price. The prevailing, call it, narrative from places like mainstream media and folks that are sort of looking at the auto industry from a surface level, and I think there's some truth to it, is that this was a move to stoke demand. It's like, hey, you're not selling enough cars at your current prices, and so that's why you're lowering prices so more people can buy your cars. And I think there's some truth to that. If you take for example, the most popular Tesla car in the United States is a Model Y, long range. And before the price cuts, this thing started at $64,000 before any options. This was a 5-seat long-range car. That's an expensive car, y'all. That is not a cheap car. And so, do they need to lower the prices for more people to buy Teslas? Obviously, absolutely. I think that's one of the reasons why they did that. There's a couple things at play, though, specifically in the U.S., and we'll talk about global as well. In the U.S., there's an EV tax credit that has kicked in, started in January, that can give eligible cars and buyers $7,500 off their EV, which Tesla is now able to take advantage of for most of their cars, for most of the trims that they sell in the Model 3 and Model Y category right now. And whereas before 2023, between about 2019 and 2023, Tesla had no EV incentives to take care of, because they exhausted their original 200,000 unit cap with the old EV tax credit. Yep. And so now you have this new dynamic where folks are realizing, hey, if I want to buy a Tesla, I can wait a little bit from last year and get a Tesla for cheaper. So that's one thing going on. The other one is because of that really high price for, say, the Model Y at $64,000, and the Model 3, I think, was at $55,000 or whatever, you're excluding a lot of people on the lower level that would have chosen a Tesla that couldn't unless you had some sort of price drop. So lowering the price dramatically increases how many people can buy the car. And this is sort of the narrative that gets tied to, well, there's a demand problem. Tesla has a demand problem. Sure, they have a demand problem in the sense that they can't sell cars that are more than, so, say, $55,000 to $65,000 per unit at 3 million or 4 million units per year, whatever that number is. But once you lower the price, you can do that. I think the thing that's missing, though, is that at least in the investing world, in the, call it, people that are really interested in the stock and how Tesla's profitability is going to be impacted, I think most folks are missing the point that even if Tesla were to lower the prices from, say, $65,000 for a Model Y to an effective price to the consumer with the EV tax credit of $45,000 now, which is almost a $20,000 gap, it essentially is a $20,000 gap, this allows you to pump a lot more units through your factories. And you have this mechanism kicking in called economies of scale. And what economies of scale do is that because you're pushing more units through a factory, you are able to reduce the cost per unit for each one of those cars, the more cars you push through that. And so how do you do that? In a factory, you have static labor and static machinery, and that's about, call it, half of the cost-ish, probably more, but it's a significant portion of the cost that goes into building a car. So think about it this way. If one car goes through a production line, right, you still need, say, 1,000 people and, 500 machines and robots to make one car. But you need those same exact machine and robots, people and robots in no higher quantity, the same exact number to make 1,000 cars, right? So it's all about how quickly can you move those cars through the factory, and that's how car manufacturing works. And that's why the cheaper cars are able to be sold for a profit, because the cheaper cars theoretically are easier to build, which means you can push a lot more cars through the factory. The key thing here, though, is that with the new pricing, Tesla's probably going to be able to ship. They're probably going to be able to reach a run rate of, say, 3 million cars per year. Right now, they're about 2 million cars per year, the run rate. They're going to be able to increase it about 50% to 3 million cars per year, which implies that the Model 3 or the Model Y is going to be selling more than 1 million units per year, vastly more than a million units per year, really. It's probably closer to 1.5, 1.6, especially for the Model Y, which makes it mass market. Your typical mass market cars, like your Camrys, your Corollas, your your Accords, even if you want to call it the BMW 3 Series, the Mercedes C-Class, these cars are technically mass market. Yep. The margin on those cars at that price level is like single digit. It's like 5%, 8%, 9%, right? In the best case scenario for those lower price trims. Tesla's going to be able to do this. If I sat down and I ran the math, I tried to do this over the weekend. They're going to be able to do this at 20% margin plus, which is a huge development that has happened here in mass market manufacturing. So Tesla now has the ability to sell a car for much cheaper, but because they have the factories built out now, they have Fremont, Shanghai, Berlin, Austin, and as Berlin and Austin ramp, they're going to be able to take advantage of those economies of scale, and their effective margin doesn't really change too much. Yes, is their margin percentage going down from, say, 28% to maybe 23% or 22%? Yes, it will, especially in the near term. But as you achieve better contracts, you order more from suppliers at one time, which lowers your costs. You go into your additional process improvements. You push the single piece casting in the structural battery pack to the Model 3. Berlin and Austin go 100%. And, in the best case scenario, and I hate to bring this up, but full self-driving adoption begins. These are all levers you can pull to restore that margin. And the way I view it, and again, I could be biased because I'm a Tesla fan. I like what Tesla does. I work there. I've been following the company forever. From my standpoint, this shouldn't be viewed through a demand lens. It should be viewed through a maximization of your production capability. And as an investor, I'm viewing it that way. It's like, if Tesla were to choose to run a full throttle, what are the implications from an earnings perspective? And if you sit down and do the math, you see that even though your percentage might come down on the margin perspective, the net dollars you can generate by going full throttle could be 2 times, 3 times, 5 times more the closer you get to 20 million units per year, which is Tesla's goal by 2030. And then the floodgates open at that point, because now Tesla has the capability of selling what's deemed as a best-in-class product. So I think if you look at any surveys, any publications, you can see that Tesla not only has the best EVs versus competitors, but sometimes they have the best car, period. And now you're moving away from Tesla being unaffordable to Tesla being affordable. And so when is the last time you had a car that's best in class across every measurable unit, and it's one of the cheapest, right? That's the formula that I don't think folks are looking at when they're saying, well, there's a demand problem. It's like, yes, there's a demand problem for Tesla to be able to sell a $65,000 Model Y. But what does it mean when Tesla is able to sell a $45,000 Model Y with the same exact specs, 4.80 to 60, 330 miles, no maintenance, supercharger network? Starts to sound extremely affordable. And actually today I'm working on a video that I'm looking to compare the Camry versus the Model 3, like the latest version of the Model 3 with the new price cuts. The Model 3 is cheaper to operate over 8 years versus a Toyota Camry. Toyota Camry costs $28,000. The Tesla Model 3 costs $43,000. And then you get the EV tax credit of $7,500, and the fuel cost is like a $5,000 difference more. You already have a cheaper car, So it's stuff like this that is missing from the discussion. And I think that gap is going to continue to widen the more we go into this year, and especially as a recession takes hold and folks start to really watch over where they're spending. Teslas are now becoming a very good value proposition for a buyer. Now, of course, people will say, well, just don't sell your car, keep your used car and just buy used cars. Of course. But not everybody does that. Even in a recession, people still buy new cars. The question becomes, why would you buy anything else when you can buy a Tesla, which is superior and just as cheap, if not cheaper to run than a lot of its competition? And then the equation breaks, and Tesla has the scale to sell you that. Yeah. Nobody else has the scale to sell you that.
Not in
it's
the
like,
EV
this
space.
Is like,
yeah, if you want an EV, there's not much competition right now, and it's still right now. So, it's very crazy how this unfolds, and especially with Project Highlander. Also, we haven't talked about that even, and I mean, Project Highlander is, as I've understand it, the front casting, rear casting, to combine together to get it more faster out of the line. Or out of the factory, right? And do they have the structural battery pack as well, I think? Or am I mistaken there?
I can't remember the details for the Model 3, but I mean, the rear casting on its own and the front casting are going to make a huge difference because you have to recall the Model 3 line in Fremont right now is Tesla's arguably one of their worst production lines in the entire supply chain, because it was the first time they tried to fully automate, and it almost bankrupted the company because of how big of a mess it was. And Sandy himself was like, what a disaster this is, until he looked at the internals. It was like, wow, this is a great car. So now they're removing those costs out of the system. So once that kicks into gear, which makes a ton of sense, then you have additional savings. It's probably going to save them another $2,000 to $3,000 per car, probably. It's just rough math, but yeah.
Yeah, I mean, the Model 3 we have today is produced in less than 10 hours. You can imagine that they're going to pump out much more if they have the front casting also. And it's going to be very interesting. What we don't really know the details from Project Highlander. It's just a project name. We don't have like the juicy infos right now. It's more or less rumors, like you say. But something like that I think can really change also the trajectory of the Model 3 production numbers and sales also, because they were like going up a little bit and then dipping a little bit, like a little bit flatlining. But the Model Y sales were like up like crazy. But I think if they can manage to lower the cost of the Model 3 even more, then we have our low entry vehicle. And then let's wait 5 years, and then they have the robotaxi platform, or in less than 5 years. And I think if they make a spin-off of the robotaxi, a smaller robotaxi for the European market or the Chinese market, I think it's gonna like go off like crazy.
Yeah,
but
I agree.
In the short term, they have the low-cost Model 3 to compensate for that. And I think in a recession, they need a low-cost car. And I think the Model 3 will be the way to go. To go in that direction. I think it's going to be very interesting 2023 to see what they have up their sleeve.
Yeah, for sure. I think you make a good point that having like an affordable vehicle in the fleet makes sense for 2023. And I right or wrong, the strategy for Tesla to lower their prices bodes really well for them to be successful in a recession. And it's up to the investing community, the Wall Street, to decide, okay, so how does this impact my valuation model for Tesla in the short term and the long term? In the short term, there's obviously going to be a margin hit, but it's not going to be as big as people think because of economies of scale. Not to mention, and this is a big point here, if we're going into a recession, you can already see 2022 versus 2021 auto industry sales, at least in the US, and I'm sure it's the same in Europe, is down. So they're down 8.4%, 8.6%, right? So this is a industry that's slowing down quite a bit. Mm-hmm. What does that mean? Suppliers now that supply these auto manufacturers are, by default, are going to be building up inventory. They're going to be building up inventory for parts, pumps, trim, materials, everything, right? Which causes prices to come down. And if the rest of the auto industry is going down, but Tesla's growing, guess what happens? One party has leverage and the other one doesn't for pricing. So Tesla can go to a supplier now in a recession, knowing that they're growing, that's supplying to a bunch of automakers, and they know the automakers are not ordering as much because they're slowing down. Tesla can be like, yo, we need to renegotiate our contract because I'm going to order more from you, and I know you got a glut of inventory. I need 20% off my parts, right? And then Tesla's operating from a position of strength. And
good point.
This has never happened before. This has never happened before for Tesla. Tesla was at the whims of the auto market dictating pricing for them. And now the equation has shifted because now Tesla's the one that's growing, and because of how the Fed is deciding to handle inflation, it's causing the economy to slow down on purpose, which is hurting these suppliers to be able to push through their inventory. But Tesla wins because they're the only, really the only one outside of like BYD and other Chinese manufacturers actually growing their net production. And this is what dramatically is going to be able to help them lower their cost over time quicker than people think because of how they're going to be able to renegotiate a lot of those contracts. Some raw materials are still going to be tough to get, like lithium and others. They're still going to have some, they're going to be at the whims of the cost of that. But as a total percentage of the car costs, the other stuff is going to be, it's going to more than offset the cost of lithium, I think. And actually have Corey from Monroe Live coming on my channel tomorrow to discuss this in detail. So we can actually sit down and do the math on some of this stuff. But everything's lining up perfectly for Tesla. So the question becomes, the solution is, as long as they can drum up, quote unquote, enough demand at the right price and still make enough money to not only keep their doors open, but continue to make investors happy, 2023 could be just such a phenomenal year for the company. And we're not even talking about energy, and we're not even talking about full self-driving, right?
Yeah, that's crazy. Yeah, it's really crazy. And if you also compare it to
I sound so biased. Sorry.
Yeah,
I just sound so biased.
Me too.
You know, but I'm like, this is just factual statements, I feel like. And if I'm wrong, somebody tell me. But I'm trying to be impartial, but this is what it looks like. I don't know what to tell you.
It's the same with my content. Also, the questions I ask the people, and like I always feel like, okay, what's happening here? The trajectory of Tesla is still going up, 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 and I also try to find weaknesses and stuff like that. I think we had from the subjective feeling side, a down month was December. More or less, the community was split and everything because of the stock price and stuff like that. It was very strange to see. Also the conflict inside of the Tesla community, because Elon was turning up the heat with his political commentary all the time. And I think that's over a little bit because stuff is happening again. And I think the focus will now shift in 2023 more on Tesla again, a little bit away from Elon Musk. And I think that's also a good thing. And I think people will be reminded in 2023 that Tesla is still operating very, very well, even without Elon's 100% involvement. I think he's like involved 90% still, but people don't see it because he's running Twitter on the side now. Yeah, don't underestimate how much he still is working on Tesla and stuff like that. And I think now is still a year where it feels like Tesla is going down, or people don't buy every Tesla that is produced now and stuff like that. But I think people forgot how in 2022 they raised prices. And now they're lowering prices again. It's just like they're going to the default level again. And the media also interprets that as a weakness. If you look at the short term, it looks like a weakness, but it really isn't. It's just a natural thing to do. And I think, like you said, the economies of scale, if that hits very hard, I think Tesla can now do interesting things with pricing, because then they can raise their margins with production like they were planning to do. I think they were preparing for a recession. That's why they raised the prices. Elon also talked about that. Now it seems like, okay, maybe we can go down with the price again. It looks like recession might be over, because still the US spending is still high, very high. Ross Gerber also talked about that on my channel, that the implications that a recession is there isn't as strong as we thought before. People spend money like crazy in the US still. Like we saw, the inventory was down like 50% now. Tesla will be selling every EV they produce in the next couple of months, I think. Like they're going to catch up again.
So the price cuts was definitely the big thing that I've been looking into. I mean, the EV tax credit was something that was really bugging me. As I'm sure people watching this probably know that I've been freaking really pissed off, and I still am.
Yeah,
even though Tesla
crazy.
lowered their price, it doesn't matter. Like an EV, like a Wrangler that gets 20 miles of range shouldn't be getting the tax credit. That makes no sense. And 20 miles per gallon. So I'm still pushing to get that changed in some respect. Is Tesla benefiting from it now? Yes, but does it change the fact that the tax credit is broken? No. So that's another thing. I think it's really just like studying the effects of this price decrease are quite significant.
Yeah.
And then Tesla Energy is another thing that's becoming a big like a big point of focus for me. I had Matt Smith on my channel last week on Wednesday. He worked in the utility sector and the energy sector for a long time, and he's run models on Tesla Energy. 2023, I think, is going to be a year of that part of the business becoming much larger. It's still significantly smaller than the car business, especially from a total earnings perspective. It's not really adding that much earnings to the company, but that could change in 2023. And with the Megapack XL and the other products they have, it looks like they have the ability to sell that into the markets at a very, very high margin, depending on some of the data sets that you're looking at. And we should start seeing some clues for that, probably starting in Q4 earnings a little bit, because they have that Lathrop manufacturing facility that has gone live in California, where they're really starting to ramp the energy side of the business. We should see some sort of tick. And then on the earnings call, I'm curious to see how management's going to talk about how they're guiding for Tesla Energy into the coming quarters, right? So what is Tesla Energy going to do in Q1 and Q2 of this year? How are they thinking about the growth of that business? They like to give automotive year-over-year average growth of 50% per year. Are you going to give us one for energy? Could we get one for, maybe, is it 100% year-over-year? Is it 30% year-over-year, right? That'd be nice, because that's really going to help the investing community begin modeling that into their prices, right? So you have this entire Wall Street. If you look at their models, very few people, if any, are really pricing in Tesla Energy into their model. So when they say Tesla's supposed to be $200 a share or $300 a share, most of them aren't really putting energy in there, and they should. But the reason why is because Tesla hasn't been able to ramp that part of the business, because they say it's because of supply shortages. But if they really are serious about that side of the business, we should start seeing significant increases this year in 2023, which will allow a lot of analysts to start building that into their models, depending what kind of guidance we see. If Tesla really comes out and shows that they're able to grow this thing, say 30% quarter over quarter for the next few years, theoretically, folks out in 2025, 2026 should be able to price that in at a significant significant earnings per year sort of number, which will flow back down to the stock price. But we'll see. Tesla has to execute. Tesla has to show that it's able to do that first. I tend to give them the benefit of the doubt from that perspective, because if there's one thing that Tesla's extremely good at, it's manufacturing. They're always late, but they do hit their targets eventually. And that's sort of the MO for energy, I think, is that they're obviously extremely late, but they will hit their targets. And if Elon's prediction is correct that over time it'll be just as big as the auto sector over time, it might take 10 years, maybe more. that still implies a significant growth from here. I mean, if you go from zero earnings to $100 billion earnings, then that's going to really change the equation up for sure.
And I also think what people are also missing in that sector, if Tesla manages to set up a pipeline where they can produce their mega packs, and also if they have batteries left from the car production, more or less, or if they see, the growth rate is plummeting here. I mean, they won't do that; they will react. But still, like if you spin that forward and you realize, what happens if they can produce 20 million cars a year, and now we have now the demand is plummeting significantly because everybody drives Teslas and EVs and the market is saturated. What's happening then? Yeah, the energy sector will be built out more, I think, because then we have battery storage. And then, like the big sector, like significantly bigger sector is energy, actually. And I think they, like from a flexibility standpoint, Tesla is in such a good position to shift their business all the time. Now they are set, and they had a problem in like 2015. They almost died. The company almost died, or I think it was 2015, right? I'm not
2016, 2017.
Around that time exactly. And but now we
first time Elon smoked weed on Joe Rogan.
That's when everything fell down.
Now I understand why he was smoking. It's probably like, thank God.
Yeah, thank God.
Go bankrupt. Probably, honestly.
Well, I gotta relax now.
Yeah.
But I think it's very interesting to see the sector, and I think people have to be patient, especially I mean short-term traders and stuff like that. And Wall Street is so hungry for the new announcements and stuff like that, but they don't change really much the core of the business. And if you look at the core of the business, it looks very good actually. And but that's just stock stuff. I'm more or less on the long side and don't really watch that. I just look at what the company what the company is doing and what the trajectory is, and we see growth every year. And like, wow, 44% growth isn't good. I don't realize what's happening. Which company is growing 50% in a recession or in a COVID pandemic at like 2020, 2021, 2022, and now they're always growing. Even if it slows down, we will laugh at this in 10 years, I think, in my opinion. So
I agree. I think the last 12 months have been such a huge learning lesson for many. You know, including myself. Yeah, I mean, this is my first true bear market that I've been investing in, and you're at the mercy of whatever the macroeconomic environment says is going to happen, regardless of how strong your conviction is on a company. If the market thinks the Tesla should be valued at $350 billion market cap, it's going to be valued at $350 market. It doesn't matter. It doesn't matter how badly you think this price should be higher. It doesn't care. You just have to go to the whims of it. So and that's why, short-term investing is difficult on the psyche, because it's like you're constantly fighting against the rest of the market. You're trying to beat it, you know? Whereas if you take a longer time horizon of say 5 years plus, then you're not really focused on day-to-day activities or day-to-day price fluctuations. You're really focused on what is the company likely to do in 5 years, and what are the earnings it's likely to generate in 5 years. And those earnings in 5 years, how does that compare to any typical investment now, where apples to apples, and which one do I think is going to make me more money over 5 years? And if the prospects of Tesla in 5 years are clearly better than other investments, then money flows into the stock. That's how investing works. And so, could the stock market go like this and like this because a lot of people want to jump in, and it drives the demand up for the stocks that are out there, which, it becomes a supply and demand equation on how stock prices move day to day. Yeah, of course. And sometimes it could make the stock price shoot up 2-3x very, very short period of time. But as long as the 5-year target of Tesla is a significant investing opportunity for people that have money, then the stock will go up, and that's just how stocks work in the long term. And that's how I always view Tesla's performance, is always through that lens of at least 5 years out. I'm more 10 years out, sometimes even 20 years out, because of how big the potential is of the company theoretically. But at that point, after 5 years, it gets iffy. It gets weird to track, but it's still fun. It's still fun to sit down and try to figure out what's going to happen,
But I think that is a good point to elaborate a little bit. Yes, I'm a Tesla investor, and I don't try to give like investment advice. I really believe in the company. That's why I wish I could tell you guys more negative stuff on Tesla, but if I compare it especially with the German auto market, because we always see those headlines going around and VW announcing something, and then I analyze this and I compare it to Tesla and I just say, what are they talking about even? I mean, like their industry is falling right now. Like you also said, the car market in general is going down, and what is really interesting is that VW's curve is going down, but the EV sector is growing a little bit, but still plummeting. The whole thing is plummeting. So their EV segment is plummeting. That means they are cannibalizing their own sales, which is also not a good thing. But it's inevitable. They have to do that. And they already announced they want to produce 5 million EVs in 2030, but their whole sales will also be decreased around 8 million or maybe 7 million, around that ballpark. So, I wish I could say different things about the auto market, but like with all the people I talked to, of course, they are from the Tesla side. And Gordon Johnson, I wrote him an email to come on my channel, but it didn't work out, sadly, and he blocked me one day. So no chance there. But I want to see hear something from the other side, and also try to reach out to people from VW, for example. But they, of course, won't talk about the internals and stuff like that because it doesn't look good. That's why nobody will talk with me, and that's a little bit difficult. But I want to tell the audience I couldn't care less if anybody will invest or won't invest. My channel is not here, and your channel as well is not here for trying to get on the button of Tesla stock will rise. It's not in our hands. It's not in our hands. And
exactly.
And I think that's very important, to point out.
100%. I'm trying. I can tell you, I'm trying my hardest to be unbiased in the way I see the Tesla story. Yeah. Do I think the Tesla story is positive? Yes. Does that automatically make me somewhat biased? Of course. But I'm trying my hardest, my absolute hardest, to analyze what's happening and try to view it through the correct lens that matters long term, right? There are different lenses, there are different ways of looking at anything. And folks that I think about the next 3 months, for example, like if I'm going to use a Tesla bear as an example. Yeah. Right now, a Tesla bear is licking their chops because they're like, okay, much lower pricing. The stock price is down dramatically. Everybody's realizing just how overpriced Tesla was. And now that Tesla is lowering their pricing, that means less earnings over time, which means that they're going to make less money, which means that the stock price is going to continue to go down, or at the very least stay where it's at. And it's not going to continue growing the way it is because we're going into a recession unless people are going to be buying cars, and Tesla's cars are too expensive, and the competition is coming, and everybody else is going to be able to take share away from Tesla. Okay, great. If that's your thesis, fantastic. It's somewhat rooted in logic in some respect. But when you dig in, and you look at the inventory levels ever since they lowered the pricing, and you think about how much capacity they've built into their factories of 2 million plus per year, and you see their price going down, and then inventories plummet once they lower the price, and then you put the prices compared to every other competitor, and you look at how happy people are with their Teslas, it's hard to say that Tesla won't be able to ship 2 million cars in roughly. Say if they don't have any logistics challenges or anything like that in 2023, they should be able to get somewhere around 2 million cars shipped in a year. That's 50% growth. Nobody else is going to be growing, most likely, in 2023 because of that general shift in the EV market and how it's a cyclical business. You know, if people are starting to save money in 2023 because they went too hot in 2021, 2022, which is what every single metric is saying. I get it might not be technically a recession, but if people are spending less and they're buying less cars, that means everybody else is shrinking. Yep. Or at the very least stay the same. If you have this player growing 50% per year on a higher base, that's more market share for that company. And they, again, grow their economies of scale. They're able to sell it for cheaper or make it for cheaper, which actually increases their margin per unit basis at the lower price. So, I don't know. You know, it's I don't know. It's, I hear the other side. I think it's important to have the other side, but there are very few people on the other side that I believe are doing the due diligence needed to actually come to a proper conclusion. Like people like Gordon Johnson, for example, who I see on Twitter, and he's the biggest bear on the market. So oftentimes it's just not rooted in reality, unfortunately, in my opinion. And he'll say the same about me. If he talks about me, he'll probably say this guy is a freaking moron, and he lives on the moon, and he doesn't know how to look at numbers, and he's ignoring all the red flags. And I would say, I think what you're deeming a red flag is not really a red flag. You're not looking at the other side of what it means to be growing. So, right. So it's like, again, but it's part of debate.
In the case of Gordon Johnson, I mean, he said stuff like the semi is physically impossible to create and stuff like that. And I mean, and many
lack of research.
Yeah. And many bears said that. And it's funny how they just come out now and say, look, I told you Bill Gates might be happy right now that he can exit.
That short worked out.
Yeah. he because he shorted Tesla significantly.
Yeah.
And it's interesting to see how the markets develop. I have one interesting question for you again. Do you think that you pointing out that the EV tax credit was flawed, that Elon reacted and lowered the prices because of
That'd
that?
Be amazing. That'd be amazing. Awesome. So I actually, when I started making the videos on that, where I saw the discrepancy and I was like, what the hell's going on? This is insane. Elon replied to my tweets and said, this is messed up. This is messed up. It shouldn't be like this. And, he sent an email to, he had everybody, the IRS had an open thing where the people could go in and email the IRS and be like, yo, fix this. This is insane. Right. So he encouraged people to do that. I was coming at it. I wasn't necessarily trying to honest to goodness. My intention wasn't to help Tesla out with this. It was as a U.S. taxpayer.
Yeah, of course. Yeah.
I am subsidizing a 20-mile range, 21 mile per gallon equivalent Jeep Wrangler with a $7,500 EV tax credit, but an American car company who makes an electric vehicle that's rated best in the world by every single magazine, basically on the whole, American built,
which
pure
is an SUV, which is an
SUV.
That's very important
with 330 miles of range exactly, and 117 miles per gallon equivalent, is not getting the credit. Why? This is the problem. That's the problem, and that's what I went after.
Even
I was like, this is insane, and I'm like,
and
the EPA,
and EPA. Deemed it is a SUV, so why isn't it counted as an SUV in the
exactly?
It really doesn't make sense.
Broken. And listen, if my videos and my tweets made it so that people stop buying the Model Y 5-seater, sorry, but just I can't, and I highly doubt it, because I think Tesla buyers are very savvy. And they know, they know to look for an EV tax credit and all that stuff. So, and Biden was hyping it up. Everybody was hyping it up. But then once you look at the details, you're like, this is insane. So, that would be amazing, though. I'm like, oh shit. But hey, listen. In the end, Tesla lowering prices is great for the consumer. This is what's ultimately most important. Is if somebody really is passionate about Tesla and they want them to succeed, and if you're an investor who wants to see the company do well, it increasing its buying base is absolutely a positive if it has the economies of scale. Yeah, that's the key thing here. Tesla has the economies of scale. Tesla is the only EV automaker on planet Earth, maybe outside of BYD, that has the ability to have economies of scale for a mass market EV. This is extremely important for the next 10 years of the auto market. It is only one of maybe two that has that scale, but it's able to do so at 4 to 6 times higher than at margin percentage than every other automaker can within the EV market. And then once the gas car market starts going down, forget it, because that's what actually makes money for a lot of these companies. So as an investor, that makes me extremely excited. Sell less units for more profit. Great margin. Sell way more units for slightly less margin, but still grow your earnings, even better. Because now you're getting more cars out there and more customers and more people see them. Dude, we were driving around Austin last week. We were stopped at a stoplight. We were in our Model Y. There was a Tesla. We were in a wall of Teslas. And I'm like, this is amazing. This is the best thing. Because imagine you being a Corolla pulling up to the stoplight and you're seeing, like, holy crap, I'm like surrounded by these Teslas. And then you kind of already know, by hearing people and seeing on YouTube, like, oh my God, something's going on. Let me go check it out. And then you see these, things about, oh my God, it's so cheap to run. It's very affordable now. There's an EV tax credit. The more of those there are out there, the better it is. I mean, come on.
Yeah, and then the next thing is maybe we have another like big event, and all the big auto companies are marketing heavy their cars, and then Tesla will again, people will Google Tesla again, like we saw in the Super Bowl.
Dude.
So there are so many aspects where that could be accelerators. People looking for Tesla, having the first contact. In marketing, we have like 7 or 8 or 9 touch points until somebody does something. And I mean, Tesla is still not marketing besides China. China, they are very active and on social media as well. But stuff like that is also a small accelerator. Again, we will see more Teslas on the road and stuff like that. And the EV tax credits, it's amazing. But you
exciting.
And you also touched on the hybrids, and I really want to talk about the hybrids, because the Jeep Wrangler 4xe, for example, it's a joke. It's a gasoline car, and they put they could put a battery inside of that and say, "Oh, it's an electric car. Look, it has a battery here."
Literally what they did.
Yeah, it has a Duracell battery. Look, it's an electric car on the dashboard.
Get the Energizer Bunny. It comes with a little Energizer Bunny on the dash.
And now maybe it's a good transition to talk about the competition in that sense, because Blume is also very verbal from Porsche about e-fuels for Porsche, but he said that not for VW. The strategy for VW is still all electric, which is a good thing to hear, because I was very scared, like, oh God, the e-fuel guy now runs VW, but now they clarified a little bit. But still, it's a tough market. But yeah, how do you view the competition, putting EVs to the side and hybrids to the front? It really doesn't make sense.
It doesn't make sense. It's automakers will do. I'm going to use an analogy here. So I'm going to pull it. I'm going to talk about Twitter, but I'm going to pull it to the legacy auto. I promise. So old Twitter, before Elon Musk bought Twitter, had 8,000 employees, and it had a new feature once every couple of years. Right? So like it took them 10 years to come out with an edit button, and they added spaces, and that's it. And some UI changes for the last few years. Like 8,000 people and a couple changes every few years at most. Once Elon Musk took it over, the company is now 2,000 people, which is 75% less people. They have more users on the platform, and they're making changes every few days or weeks. All right. Old Twitter is legacy auto. A new Twitter is Tesla. That's how we should think about it. And so how do hybrids fall into this equation? Old Twitter, in this case, legacy auto, are going to do the least amount of work possible to try and move the company forward, because it's the path of least resistance, and it disturbs the status quo as little as humanly possible. Because when you have 8,000 people working at old Twitter, there's a lot of bureaucracy, and there's a lot of layers that are built in that do not allow you to move quickly. And the people in those management roles, and the manager's manager and the manager's manager, they just want to keep it the way it is, because they get a nice paycheck. They have a nice work-life balance. They get to have a job that they like, but God forbid there's pain, because it completely disrupts their life, right? And that's not what they signed up for. And so that's what a lot of these legacy automakers are fighting with, is that they don't have that nimble work culture that wants to move as quickly as humanly possible, because the people want to do that, because that's what it means to work at that company. And hybrids have been around for what seems like 20 years, and most automakers still haven't, fully moved a lot of their fleet into hybrids. But now this, at least in the US, they have an incentive to do so with this stupid tax credit.
Yeah.
So what they're going to do, they're going to say, EVs, well, let's do hybrids first. And then once we get hybrids to where they need to be, then we go to electrics, because we just need time. We need time. Yeah. The problem is, the huge problem is that a hybrid car is still a gas car. A hybrid car is still going to be much more complex and much more expensive to build because you have two drivetrains instead of one electric drivetrain. So if now what's going to end up happening is over time, the hybrid's going to become more expensive to manufacture because the complexity doesn't go down, it goes up. Your complexity goes up in a hybrid drivetrain. And when you put it versus an EV drivetrain, which is already less complex than the gas car, like it's crazy. The auto market, the legacy auto market is going from an already complex system in the gas car to a more complex system with a hybrid thing. And then you have an EV car maker is making it less complex than the gas car. So like you're getting more complex to try and compete with something that's already less complex than the previous thing you were building. What are you doing? This makes no sense, but that's how they work. It's the path of least resistance. It's the one but then what's going to end up happening is they're going to start seeing their sales go down dramatically because they won't be able to compete against something that's going to be just dramatically cheaper to own and operate and sell. And they're going to freak out. And they're going to be like, oh my God, I don't know what's going on. We need a bailout. Oh my God, the interest rates are too high. There's a recession coming. The auto market's cyclical, and then that's what it's God forbid. It's like, no, we were too slow on EVs. We'll never cross the mind of most of these companies. That's how I predict this is going to play out. Yeah. And it will take, I think 2023, again, is going to be a down year. I do believe it's going to be a down year versus 2022 for the entire auto market. Tesla is going to become a 2 million car per year automaker, at least probably closer to 3 million by the end of the year, like run rate. They'll have the Cybertruck on the road in the US, which is going to, I believe it's going to just forget it. Yeah. The robotaxi compact car is probably going to be announced here in the next 12 to 18 months, which is going to be, think about this now, you have a $43,000 Model 3 in the US now with the EV tax credit is roughly $36,000 net to the customer. The compact car, Tesla has been open and saying they're going to look to reduce the cost by 50%, right? So what's 50% of 36,000? 20-ish thousand?
25, right? Let's say 25.
That's 25. So now you're going to have a $25,000 car from Tesla that's going to be able to drive itself.
Yeah.
How do you compete with that? That costs basically nothing to run. Well, how do you compete with that? Yeah. Like a Corolla, a Golf, all these cars become way more expensive to operate, and they're already not making money on those cars.
Yeah, especially in the EV space, like with the transition, the ID3 and stuff is the Golf more or less, but not really.
You got
actually. Yeah, crazy. Yeah.
And then people might say, well, they're going to ramp up production. I'm like, okay, great. Let's use this comparison. Look at the Mustang Mach-E. So Ford, give them credit. They are actually legitimately trying. And I applaud them. And if out of all the legacy automakers, I believe Ford is trying their hardest. Doesn't guarantee success, but they're trying their hardest, and I really respect them for that. But numbers are numbers, okay? Yeah. The Mustang Mach-E launched, I think about 6 months after the Model Y did.
Yeah.
It was right around the time. In the US, the Mach-E was able to sell, globally, in the US, I'm going to use the US, the Ford sold 26,000 units total from January through September in 2022. The Model Y sold 400,000. Okay, 400,000. What does that mean? Or 300,000, whatever. It was in the hundreds of thousands. It was 20x more than the Mustang Mach-E. What does that mean? Even if the automaker decides to go mass market on an affordable EV, it's going to take them way longer to ramp than Tesla or any other car company that is pure EV. Why? Because they have a supply chain that's secured, and they have the manufacturing capability to ramp, and they have the facilities to ramp. Tesla has 4 factories right now that are pure EV. None of the other automakers have anything like that, especially in legacy. That's true. They have a subset of their factories that do EVs. They don't have a pure... So it's over. Yeah. I mean, it's over, guys. Yeah. It's over. It's going to take time to play out, but it's over. Yeah. It's over. And that's where people will say you're a biased, Tesla lunatic. Like, okay, maybe I am. But
until you don't.
Also be that
until you don't.
It could also be that it's just that's what it is, and that's what happened. And Tesla's ability to plan for this ahead of time and really build out the supply chain is really their competitive advantage. The last 10 years of work that they did to get to this point is what's going to allow them to dominate the next 10. And I seriously believe that. And if you just look at it objectively, that's what appears to be the case. And if I'm wrong, I'll be happy to say I'm an idiot and I'm wrong, but I just don't, it doesn't add up to me.
It
doesn't add up to me.
Exactly. If you look at the numbers, at the facts, it's so hard to not go on track onto the thesis that you got or the thesis that I've got around that ballpark. It's so hard not to get into that space, especially if you compare the numbers of the competition in that. I've always to put that in quotes because it's not really, they're not really competing right now. It's still, I mean, if you look at the design perspective, for example, I've seen a lot of great EVs designed by, for example, Citroën is a bigger brand in Europe. They sell the smaller cars. The robotaxi could tackle that market. So it's a very important brand like Fiat, for example, also in Europe.
Peugeot is another one.
Peugeot,
Renault.
Exactly. And Citroën also designed this Citroën Olli. It's like a pickup truck, but a small pickup truck for the European market. Very futuristic design, very extreme also, and something that appeals to me as a designer, because I look at this and I say, okay, it's so unique, it's so different. I love it. Not everybody will like it, but I see this and I think they're designing great cars. Also Polestar, for example, they're so good at designing cars, and also the software seems to be okay. Yeah, you can really use it, but it's not comparable to Tesla because they have better software development. They have a unique in-house OS that works actually, that's not like outsourced like VW does with Carriot, for example. Before Carriot, they outsourced every fragment of the software. Guess what's happening? It will look like this. Yeah, the navigation system from that company, the media software from that company, and now do an update. Yeah, that's why the interface looks like crap. And you don't have the power over that. And I also think many people are fans of the Mercedes EQS and stuff like that also in Germany. And I have a friend who works there in the design department. And he's also very much a fan. And he doesn't like Elon Musk and everything surrounding Tesla. So he's a good person to bring on maybe you should as a critic. But I don't know if he will do it. But let's see. But yeah, he made the animations of the headlights, for example, that the Mercedes logo, if you saw the car, you see the Mercedes logo in the headlights and stuff like that. Very gimmicky, but interesting stuff.
Beautiful, yeah. Beautiful.
But sorry, where's the frunk? That's something I can't get over. Or why do you use a Galaxy Tab 5 from 2016 in the back seat? What is happening? Yep. And that was at the release 2020. I would throw the person out who directed this, and I can't wrap my head around how crazy this is, and the interfaces are stuttering.
And are you making any money on it?
Yeah, and it's a 150,000 euro car. Let that sink in. You know what I mean? It astonishes me that people are so blind to see that. I mean, Mercedes have their brand, BMW has their brand, VW also kind of has their brand. You have to give them that. But especially Mercedes is a very strong brand. But how long does this keep them afloat all the time? How long? 10 years? 15 years? 8 years? Right. Maybe Tesla will buy Mercedes? No, they won't. But you know what I mean? Yeah. What will happen? Yeah. I mean, the brand doesn't save you if your fundamentals aren't right. And yeah, the EQS has a longer range than the Model Y long range, for example. Okay, but it's heavy as F, and if you load it up, how heavy is it? And is your license eligible?
And how much does it cost?
150,000. How about Plaid Plus? I would take that. And even if they manage to like, they have competition, they have competing cars against Tesla. But like we see at Ford, try to ramp it up. That's the next thing. Try to ramp your cool design cars up. How efficient is your design of your cool design of your car? Does it work? Yeah. Does it have a frunk? The German car brands follow the strategy of not putting a frunk in because they still produce both types of vehicles, ICE cars and electric cars. That's why they won't open up the frunk and say, yeah, here's the frunk. It doesn't really make sense. The EQS has even a small hinge, a small thing on the side where you could put the wiper fluid in. It's so ridiculous. They've designed a small door on the side to put your wiper fluid in.
Wow.
Like, it's ridiculous. It's so much space wasted. It's so crazy. It's so crazy. And it's heavy. It's so heavy. But okay, people like that. I don't really like the design of the EQS.
It's not mass market. That's what it comes down to. It's not mass market. That's the equation. Yeah,
and the thing is, they don't even target the mass market. Even BMW said, mass market is not for us. Okay, yeah, great, but...
Because they can't make money in it.
They say, it's a luxury vehicle. Yeah, they try to compensate that with luxury.
Luxury brands exist because they don't want to put in the effort to become mass market, because it's way harder to make money mass market than it is as a luxury vehicle.
Yeah.
So as a luxury vehicle, it becomes much more about like how it makes you feel. Like when you buy the Mercedes, do you feel like you own something that makes you happy? Do you like the way you look in it?
Yeah.
Do you like the way people look at you in it? Right.
But
it becomes much more artistic.
Yeah.
But it's not it's not utility.
But one thing I have to point out here that was my point all along. What is with the interfaces stuttering? Yeah, is that luxurious? If you have a luxurious car, you could go in and you see like, okay, great animation when you start your car.
Great point.
But how about entertainment? How about you play Tetris on my Mercedes EQS from Germany? Yeah, and then you press the button
because it's all BS.
And the interface is going like this, and then start the game. And you know what I mean? It's ridiculous. Yeah. It isn't luxurious. Lee from Tesla Economists pointed that out when I've interviewed him on my channel. He said, there's a difference between decadence and luxury. And the German cars are decadent, actually. They're just like, it's a little bit of a difference. It's not luxurious. Is a self-driving car luxurious? Oh, it's like a driver. Wow, I can lean back, I can play games. Right. That's luxury, in my opinion. And that's something that will change, I think, over the years. And the next thing is, could Tesla do a luxury version of their cars with great designer Mr. Holzhausen, for example? I think they could do that. Leather stitching and better materials and stuff like that, more quality control. They could do that. If the mass market is saturated very fast, they could just shift to the luxury segment very easily, because the rest is already very luxurious, because my car rides itself. How about that?
But here's the deal. Let everybody else take the luxury, right? I think that's what a lot of people have sort of, Tesla has gone undercover in this, is that a lot of people view Tesla as a luxury automaker. You know, it's like, oh, it's luxurious. It's very expensive. It's luxurious. It was for a long time. It was for a long time. But Tesla's goal from the very beginning was what? Is to advance the advent of sustainable transport. You can't do that unless you have a mass market, cheap electric vehicle. Yeah. That was Tesla's point all along. And what have they done for the last 10 years? They've been perfecting that process. They've been perfecting it. They started with the Model S. That was, it squeaked every time it hit 20,000 miles. But then after a year or two, they figured it out. Then they did the Model X, which was the most complex thing you could have ever done. They learned their mistakes, and now it's a great car. Then they did the Model 3, which was their first mass market vehicle. And it still works, and it's great. Not the best build quality in the world, but it was more than good enough to win the hearts of millions of people. Then the Model Y came out, which is almost like a perfected version of that mass market car where they can ship millions of units per year. And now they're going to take all those learnings. They're going to first build the thing behind me. Yeah. The Cybertruck as like a ode to America. I don't even, like, this is just they just wanted to do something incredible. Yeah. Right? So that's the Cybertruck. And then after the Cybertruck, they're going to be like, okay, now check out all the things we've learned. We learned how to make something with an exoskeleton. We learned how to make something incredibly reliable. We have killer UI. We're learning how to make the car drive itself. And we've learned how to scale up to multiple millions of units per year. Here is your $25,000 car. And then with all those learnings,
credits roll in, and credits roll in.
Yeah, theme song plays. Just pick a theme song, and then the credits. People are like high fiving and dancing.
Dancing. Yeah.
And then you see everything else in their background just on fire, and all the automakers are like blowing up, and the factories are collapsing.
In slow motion.
I mean, it writes itself. You're 100%. It writes itself. And I sound like an insane Tesla fanboy when I say that. Yeah. But that's what it looks like to me. And I think that's where we're going. And I think we're already headed there. I don't think it's stoppable. I think the thing that a lot of folks maybe don't understand is that you can't just turn on a production line like that.
Yeah.
It takes a lot of time, a lot of effort, a lot of complexity, a lot of securing of supply chain and raw materials. It takes a very talented team, and then you got to move as fast as humanly possible, and you got to go through pain like crazy. Yeah. Unless you do that, you can't get to the point to where Tesla is, and perhaps even BYD in the Chinese market. So best of luck to everybody else, but it looks grim.
Yeah, it really is like you say. I totally agree. And my thesis is that Tesla and the Chinese will split up the car segment very hard. I think I've said like 50%.
I agree.
Tesla could have 40%. That's my prediction. I mean, it's very bullish to say, but if you look at the competition, I can't. I mean, there will be.
I'm afraid for the Europeans, man.
Yeah.
The Europeans are in trouble.
Yeah, I totally am too. And the German market is also very dependent on the car market. And I mean, Tesla will swoop up great talent here in Germany if VW steps back from some of those third-party suppliers. And but still, I think there will be a huge gap to fill, and the Chinese can produce massively, and Tesla can produce massively. That's why they will be having a great amount of market share. But then you have to add on the software side, and if you add on the software side, then Tesla still has the leverage even before the Chinese car companies, in my opinion.
Right.
Yeah. So very interesting stuff happening now, and
crazy.
It's more like interesting than ever before, I think, because now everything unfolds. Last episode we talked, there is a thesis, you swipe away the sand and suddenly you realize, oh, there is something. And I think it unfolds now. And now we're just sitting back more or less and watching how it unfolds. The thesis that we built up over years is unfolding right now. And that's why we all sound like crazy Tesla fanboy lunatics, I think, because but it's still
feels like
it's not on the point of no return. Like people haven't seen that. Maybe it is already done. Like you said, Tesla already won.
I think it's done.
Me too.
I think we've started. So it's most story arcs have 3 parts. You have 3 arcs.
Yeah.
You have 3 chapters. You have the introduction, then you have like the conflict, and then you have the grand finale.
Yeah.
We've just started the grand finale.
Yeah.
Like and this is so hyperbolic, but the price cut, I really believe, January 12th, 2023, that giant price cut that they passed on, that's going to prove to be not nearly as impactful from a margin perspective as people think because of Tesla's economies of scale. I really think that's the beginning of the final act of Tesla's story arc, which is become a dominant automaker in the world stage. Mm-hmm. That price cut, that sudden price cut that most people are like, what the hell just happened, is the encapsulation of the last 10 years of work that Tesla has put in to become a mass market automaker. It starts with that. Then it goes to Cybertruck. Then it goes to Robotaxi, compact car. Then it goes to full self-driving, and then it goes to 20 million units per year. And that is like the final scene is 20 million units per year. Yeah. It starts with this giant price cut and it ends with that. So we'll see. We'll see what happens.
Yeah. And
we'll see what happens.
I think, Farzad, we should do collaborate on the trailer where it starts like, in a world where ice cars are sold and stuff like that.
Dun dun dun.
With the 3 acts. And then
we should get like Tom Cruise or something. Yeah. Can we get Tom Cruise? Tom Cruise, you watching this, bro?
A deep fake of Tom Cruise we could get.
We can get the script, like ChatGPT can make the script, and then we'll deep fake all the actors,
in a world.
Dude, that's
and
it.
Elon Musk also joins with fake Elon voices with the voice changer stuff I did on Twitter a little bit. That's
so funny.
Fun aside, thank you, Farzad, for being on the channel again. I really enjoyed this conversation. I hope I don't I was a little bit swerving around with my words.
No,
but,
dude, you did great like always.
Yeah. Of course. Thank you very much for your time. I really appreciate it. And we both can't wait for the Cybertruck. We know that. I still hope that my Cybertruck will be delivered to Europe, and I hope the regulators will allow this car.
I hope so too.
Please do it. I have to ride around Germany with that car.
Can you imagine?
Yes.
Oh my God.
It would be the best thing ever. I have a reservation still going on. I have a VIN number. Please, Elon, release the Cybertruck. Release it in Europe.
Talk to your government, bro.
Yeah.
If your government lets it, he'll do it, I'm sure.
Yeah, I'm gonna call the
Call him up.
Call the politicians. No problem. I hope so.
Yeah, the new prime minister. Who's the new prime minister? It was Merkel, right? Merkel.
It was Merkel, and now it's Olaf Scholz. He's called Olaf Scholz. He's from SPD. It's like the socialist party, but it's different than in the US. It's not like socialism like you
I know.
imagine
European
it now.
socialism is like actual socialism.
Yeah, it's a softer version of that. It's not as
extreme.
Not communism. Yeah. Okay. Yeah. So thanks, Farzad, for being on. So there's only one last thing to say now. Goodbye, everybody.
Goodbye, everybody.
Wasn't this episode awesome? Let's accelerate the pace of innovation by subscribing to Tesla Fix. It is my absolute favorite channel on the whole interwebs. Just do it, bro.